Now, the last thing I'm going to show here is an Elliott wave view of what's happening with the markets, and I'm aware that maybe some people following this aren't that interested in Elliott wave or that familiar with it, but for those that are, this is why it's in there. I have some red labels and blue labels, and those show kind of two different systems of labeling this, and I'm not going to really endorse one view, but one view would be that there's a long-term wave 1 down off of the recent bull market peak, and the move up since then is a developing 333 correction where you have an ABC, an X, an ABC, an X, and then you'd expect an ABC again. So that's one way to look at this. In that case, you would expect the market probably to pull back relatively soon and then have some other advance up into these levels maybe in the next few weeks. Now, another way to look at this is as a developing triangle where you have an A, B, C, D, E, and some of the rationale for that is this correction from June to July is significantly longer and larger than any correction here, and it breaks the channel that was forming for this corrective action here. That would indicate that from kind of a logical standpoint of how the market moves, that this was a little bit larger degree move than anything in here. So rather than it being an X wave, it's its own separate wave. In any case, if you view it like that, again, this would allow maybe another 4, 5, 6 weeks for the market to kind of drift sideways or up for this to end. And I'm not saying that the pattern couldn't get more complex than that, but either of those views, which are kind of two different systems of thought, would be that the market should be forming a top within the next few weeks, and it would very likely be somewhere in this 1,000 to 1,100 range. I've showed before on recent charts on the blog how after the market crashed from September into October, this rebound on October 13th and 14th formed a swing high point here, and all of the trading since that level has been below that line, and we're approaching that level now. If that level would happen to be exceeded, which is about 1044 on the S&P 500, if that would be exceeded, that would be complete kind of a major short squeeze where anybody who was kind of late to the party as far as short selling or just selling their stocks, they're now going to be likely be stopped out of short positions or be feeling the pressure to get back going long or buying back into their investments if they sold out of them. And so I think that creates kind of a potential capitulation point psychologically and for the actual structure, order flow of the market at that level. So it would be kind of ideal to see the market run up, pull back a little bit and run up, exceed this level, and then reverse back below it. I don't know that will actually happen, but that'd be something I'd be watching for very closely, because that is the only major resistance level left before we're back up into around the 1200 range up here. And that's all that I'm going to post for this video. So if there's anything else anybody really wants covered or anything, just please leave a comment, and I'll try and put that in future posts or even in a video post.